Japan's rising service inflation signals a structural economic shift. Japan's corporate service inflation for February 2026 may seem like a small increase, but it reflects a deeper transformation within the country's economy. The Services Producer Price Index rose to 2.7% year-on-year, slightly higher than the previous month, continuing a steady upward trend in service sector costs. What makes this development important is the source of inflation. In the past, Japan's price increases were mainly driven by external factors such as energy imports. Now, inflation is increasingly wage-driven. A tightening labor market has pushed companies to raise salaries, particularly in sectors like hospitality, logistics, and construction. Businesses, in turn, are passing these higher labor costs on to customers. This shift is significant because Japan has faced decades of deflation and stagnant wages. Recently, wage growth has gained momentum, with major firms agreeing to notable pay increases. This suggests the emergence of a healthier economic cycle, where rising wages support higher consumption, which then sustains moderate inflation. However, the broader economic picture remains mixed. While service inflation is strengthening, overall consumer inflation has shown signs of slowing, partly due to government measures aimed at controlling energy prices. This creates a complex situation for policymakers, as underlying inflation trends appear stronger than headline figures suggest. At the same time, global uncertainties continue to influence Japan's economy. Higher global energy prices and a relatively weak yen are increasing import costs, adding another layer of pressure. These external factors make it more challenging to clearly assess the strength of domestic demand. The Bank of Japan, which ended its long period of ultra-loose monetary policy in 2024, is now carefully monitoring these developments. With interest rates gradually rising, the central bank faces a delicate balance, ensuring inflation remains stable without slowing economic recovery. Japan's rising service inflation is more than just a marginal increase. It signals a fundamental shift from externally driven to domestically driven inflation. If sustained, this trend could mark a turning point for Japan's economy, moving it away from decades of deflation toward a more stable and growth-oriented future, though global risks still pose challenges.
Thanks for watching International Trade Talk, where we simplify global trade and business insights for you. If you enjoyed this video, don't forget to like, subscribe, and turn on the notification bell.
Watch our next video to stay updated with the latest global trade trends and market insights. See you in the next episode of International Trade Talk.